Okay, I'm going to do a series of posts on price action and reading price action. Reading price action is actually really easy. Doesn't need to be all that complicated. It's not a matter of memorizing patterns and bars and funny names. It's a matter of understanding what these bars represent. We're not going to use a whole lot of bars here. What we're going to do is use bars that represent some sort of significant supply-demand event that's going on. And so if we're going to do price action, we have to get beyond the mindset of setup. You want to see this. These are buyers and sellers. You want to know what the essence of these bars in, and then you just relate the bars to the price action. One bar to the next bar. What's the relationship? Are the buyers and sellers winning? So I'm going to do a series of blog posts, and here I'm going to define them, talk a little bit about them. I'll talk about how to mark them out, and as we do a few in the series, we'll talk about how to use them for, say, confirmations or entries, or even just how to read them. We'll do a little bit as we work through, but let's just start with the basics. Let's define them. This I call a hard down. Reverse it for hard up. It's going to open in its upper third, close in its lower third. Now it's more than just a bar. Understand what goes on with these things. If it's doing this, they open it. They don't mess around. They take it. They close here. There's not a lot of jacking around. There's a certain urgency when you see a bar like this. Okay, when you see a bar like there's a certain urgency going on. You see, like here, it opens, closes. There's a certain, we're not messing around anymore. Get the feel for that. Get the experience. They're real buyers and sellers. If you just memorize dead patterns, you're going to be in trouble. It's a start, and that's it. And we have tails. I'm going to define it. Opens and closes in its bottom third. Reverse it for the other side. And you can use candles with this. It doesn't matter. But understand what goes on in a tail. Buyers take it up. And sellers slam it right back down to where they came from. So they're showing you that they opened it, they took it up, and they weren't willing to go this far. They came all the way back in one shot. That's an interesting piece of information we can use to read a chart. And then outside, inside, outside bar. It's self-explanatory. This one also, get the feel for what happens. Let's put a little marking on this guy. So let's say it opens here and closes here. So they open, they take off, make effort. Buyers make effort. Just like here, buyers make effort. Buyers make effort. And immediately reverse it. Just like that. That's giving you some information. The buyers got immediately slammed. And we have wide range bar gap. And this is going to be a wide range bar with a space between the previous bar and the subsequent bar. Now a wide range bar means it's bigger than the last three bars. All right, so those are our basics. I'm going to add one more in here. So if we do this, I'm going to add one more little pattern. It's going to be a hard down followed by a hard up. So it's going to be a little two-bar pattern, and we'll call these mirror bars. So understand again what goes on in here. They open, they take it down. They open, they take it back up. Now the essence of mirror bars is a tail. See? They open, they take it up. Hang on, I got this reversed. Let's do it this way, just so we can match the down tail. You reverse it for an up tail. There we go. They open, they take it up. This one closes up here, but immediately reverses and comes down here. So if this was a 20-minute bar, you looked inside of this and said, let's look at the 10-minute bars. It would be 10-minute and 10-minute. So it's got the same essence as that, and we can see these on a chart. Now, as I read price action, what I like to do is make all of these requirement to be wide range bars, meaning if I have a tail, and you don't have to, but I want to see significant. If I have a tail, I want it to be a wide range bar tail, meaning it's going to be bigger than the last 3 bars. If I have a hard down, hard up, it's going to be bigger than the last 3 bars. So that's what wide range bar means. So for instance, just look on this chart and you can see what really sticks out. Right? If you come over here, just look and you can see how this sticks out, right? See, this is a tail. It meets our definition here. But it's not just any tail. There's several tails that meet our definition in here. But you want to see this. You don't want to memorize patterns. But look at the size of this bar. Number one, it's bigger than the last 3 bars. See? It's not only bigger than the last 3 bars, it's bigger than just about everything in this whole move. It's the biggest bar. What's it telling us? Whoosh. The buyers took it up. Zoomed. What gets zoomed? You can see them. They're zooming a level. Right now we're just reading price action. Zoom. Right? They're scouting. Anybody up here? Nope. What happens next? Right? Whoosh. That's information. They took it up in a hurry. Sellers banged it. This is something that you might be able to lean on, or at least read the market with just this one bar. See how it sticks out better than any of these bars on a chart. Just this one bar. Okay. Now let's talk a little bit how to mark these. All right, when it comes to tails, it's all a matter of zoom and what got zoomed. So when it comes to tails, I'm generally going to just mark the tail portion like this. Okay. When it comes to outside bars, and this is where I'm going to be looking for supply and demand, I'll generally mark the inside bar like this. So this is how to mark these, and then watch. What you want to do is not use these as a setup. What you want to do is learn how to identify them, and then learn how to mark them, and then observe for yourself how price interacts with that level. Don't believe me or anybody else that this should be a setup or this should be blah blah blah. If you have the ability to identify and then mark, you look for yourself what happens, and now you're learning in your own experience. And so that's what language of markets is all about, learning how to learn, not here, do this setup, this works sometimes. This is teaching techniques, practices, so you can actually go find out for yourself. It's not a matter of if it works or it doesn't work. It's never going to work or not work in isolation. You know, it's involved with context here. So what you want to see is the relationship of these buyers and sellers. What happens when you meet these guys? What happens if price comes back and meet these guys? So I have some questions. What got zoomed, meaning what got blasted? Where in the swing does it happen? So for instance, we all know how to mark swings. If we're marking swings, we're marking something like that, right? So this is a basic intro so we can get started. You see we have swings. So it's at the top of the swing. You can see it's getting to the top. It wants to entice people in. Some people get suckered and wham. And then what happens afterwards? All right, so that's basic bars and basic price reading. Now I'm showing this one, for instance. This was a particular recent trade of mine, and what I want to do when I trade is not just draw a line and say I got a line and it should hold and maybe a test and blah blah blah, or I got a setup. I don't want to guess. I'm reading this. I know we're swinging downward. Right? I might be wrong on my trade, but I know we're swinging downward. I know these guys made effort, and you know what? That tells me where I can put a stop. That tells me where I can put in it. If price comes back here, it tells me all of this information. And whether you're trading or not, you can see that you can read. You can say, ah, look at these guys. Boom. They slammed it, and then they make a new low. All right, so that's price action, and we want to learn to read price action. So you look for significant events on your chart, like so. And just remember, there's only a few bars you got to figure out in this. Hard down, hard up. If you got another name, use it. Tails, outside bar, gap, and a gap you're going to mark this way. Mirror bars. Mirror bar has the essence of a tail. That's it. I like to use wide range bars, so you can put wide range bar in front of each one of these definitions, so that way it's bigger than the last 3 bars, and they're showing you significant effort reversed. What happens next? It doesn't have to hold here, but you know what, if it comes back and eats through that tail, then you got information, right? Instead of worrying about all of this stuff, and you could read that, just look what's significant in here, and each chart's going to show you these significant areas.